welcome to episode 58 of Let's Talk Bitcoin, a twice-weekly show about the ideas, people, and projects building the digital economy and the future of money. Visit us at letstalkbitcoin.com for our daily guest blog, all our past episodes, and of course, tipping addresses. My name is Adam B. Levine, and today we're talking about the issues of now. Money made of stone might not seem like a modern topic, but turns out it's one of the best allegories for not only why Bitcoin is valuable, but the very nature of how they're transacted. LTB contributing editor George Ettinger tells us all about it in The Island of Stone Money. Then, the price is going nuts, and the frenzy in China may be to blame. We wrap up today's show talking numbers, ATMs, the yuan, and the upcoming congressional hearings in the United States. But first, I'm joined by Stephanie Murphy and Andreas M. Antonopoulos to talk the recent Inputs.io wallet hack, web wallet safety, as if that exists, two-factor authentication, and wonder aloud what it would take to see insured, reputable online wallets. Another good one dead ahead. Enjoy the show.
Recently, there were some thefts of Bitcoin in the news. One was the website Inputs.io, which actually got hacked somehow, and it was a web wallet service, and the hackers took all the Bitcoins from there. And then there was a guy, just an individual, who had something like 300 Bitcoins on blockchain.info and wasn't using two-factor authentication, and somehow somebody hacked his blockchain.info wallet and transferred all the Bitcoins out to some unknown destination. And he very frustratingly got a notification popping up on his phone while he was at the gym saying, "You have sent 300 Bitcoins to some address that he didn't recognize." And he actually posted about it on Reddit. And I mean, if I were him and I lost 300 Bitcoins, I think I'd be way more freaking out than he was. He didn't seem like it was the end of the world for him, but he did want to warn other people about what had happened. So I figured we could talk about this on the show. What can people do to kind of secure their Bitcoin wallets?
You know, Adam, when we first started discussing this, you said, do we really need to do another show on why people shouldn't store all of their money on online wallets and only use it for spending cash? And the answer is yes, apparently we do, because that lesson is something that we're going to have to repeat again and again to all new users. I'm not really surprised about the fact that the entire online wallet Inputs.io was hacked. It's not easy to do information security on digital money. We have 4 million years of experience doing physical security. We're pretty good at that. We've got less than 50 years of experience doing information security, and frankly, we suck at it. So, but I'd like to put a tiny twist on this, which is, if you have 300 Bitcoin in an online wallet and it's lost, whose fault is it? And everyone will gleefully point to this poor chap who lost his wallet. He didn't take the necessary security precautions. He didn't have two-factor authentication, etc., etc. But at some point, I think it's also important to point the finger at the software designers building online wallets and say, come on, guys, we can do better than this. Or come on, guys and girls, we can do better than this. If you have 300 Bitcoin in your wallet, there's no reason why, if you try to withdraw all of it, the software can't say, well, you just tried to withdraw more than 10 Bitcoin. We're going to either delay it for 6 hours, or you're going to have to set up two-factor authentication and go through additional verification. And by the way, we just sent an email notification that says, this is your Hail Mary email. All of your money is about to be withdrawn. You've got 6 hours to stop it if it wasn't you. You'll thank us later. You know, that we can do better UX design without changing the core protocol, without messing the reversibility of transactions. We can protect users against their own mistakes. And I think that this is an area that's ripe for innovation. And a lot of the online wallets could do a much better job ensuring that people don't put themselves in that situation in the first place, and give them an opportunity. Because quite honestly, I would go to an online wallet that had the 6-hour delay Hail Mary email if you tried to withdraw everything without two-factor.
Yeah, it seems like right now there's not much of a diversity in terms of the services that web wallets offer. I think you're right about that, Andreas. Like, there is a lot of opportunity for innovation there. And also, like, you brought up a really great point about blaming the victim. I mean, yeah, of course, this poor guy, like, we don't want to see anybody get their Bitcoin stolen, but he wasn't like asking for it because he didn't have, the proper safety precautions on his wallet, right? There's still a thief involved. Somebody still stole his Bitcoin. So why not blame that person, or blame the people who are kind of the security guards, which is those who are offering the web wallet service?
I mean, ultimately, that's the case, is that the people who are running the service are responsible for it. But does that matter in every circumstance? This guy's 28 years old. It's not like it's a corporate entity that can be sued. What can be done? Well,
in the case of Inputs.io that lost a lot of these Bitcoins, nothing can be done. In the case of the user who lost money out of a wallet, and by the way, this was on one of the wallet services that I use, that I publicly endorse, and that I'm very happy with. They have very extensive security mechanisms, and if you use them, and if you use the online wallet for petty cash and day-to-day spending, as I do, then it is a perfectly secure, very convenient, very nice service. The question is, should we design the security for the expert user, or should we design the security for the everyday user? And here's the problem. One of the most insidious and misapplied slogans in the Bitcoin space is, be your own bank. That's a terrible slogan. It's a terrible slogan for a number of reasons. First of all, because the main things that banks do, nobody wants to do anyway and don't need to be done. So I don't know why you would want to fleece.
Report yourself to the government.
Fleece yourself. Do suspicious activity reports on yourself. Freeze your money every now and then and give yourself cold sweats. Well,
don't let yourself wear sunglasses.
Disallow payments to certain types of entities that the government... No, I mean, you don't want to be that kind of bank. At the same time, you don't have the capital to be the other kind of bank, the one that does lending and offers services. So the only part of be your own bank is the security, and really you can't do that. It's a very bad slogan. Really, we should be without banks should be the slogan. We want to get all 7.5 billion of us unbanked, not bank the others. That would be a curse. But anyway, back to the point. There's a lot more we can do in terms of security, and a lot of it can be simple user experience and user interface design. There's no reason why that person wasn't receiving a nagging email every day after they went over a 10 Bitcoin balance saying, your setup is insanely insecure to a level that will be written about in the papers and be in infamy because it's so stupid. Install two-factor authentication now, you'll thank us later. I mean, we can do better interface design. We can expect more of online wallets. We have programmable money, people. Use it.
It comes back to that fundamental question of, are online wallets safe just at all? Is there a possibility to make a web wallet that's safe? Because there have been instances of two-factor authentication. I mean, David Perry, very early in Let's Talk Bitcoin's career, had two-factor authentication on his account on blockchain.info, and wound up, I think he lost, I don't remember how many, but it was a substantial amount of money at the time. What's the problem here?
The problem is twofold. One is assuming that there is such a thing as safe. There is no such thing as safe. Nothing is 100% safe. You can't make your money 100% safe. It is impossible. What you can do is you can make it more difficult for the attacker to gain money that's not really worth it because it costs more to attack, or to minimize the impact a breach will have on your use so that you can consider that an acceptable risk. So, are online wallets safe enough for petty cash and daily spending use with the correct use of the security features? Absolutely. I've been using them for a year or more. I'm very happy with the services, and they can totally be made to be secure. But I never keep more than 5 Bitcoin in there, maybe 10. The rest of my money is off-site, offline, cold storage, paper wallets. And I use two-factor authentication, second password, first password, and I keep most of the keys off. So yeah, you can do it, and they can be safe. Now, the next question is, how do we make them safer for a broader population that is accustomed to a reversible currency where banks can offer recourse in the case of theft because they control the flow?
Yeah, I was about to bring that point up about two-factor authentication, and we've discussed on the show before how sometimes it can be kind of a pain. You know, what if you lose your phone with your authentication account on it and suddenly you can't access your Bitcoins because of that? Is it better to err on the side of caution and perhaps have some people not being able to access their Bitcoins, not because of theft, but because they forgot one of their passwords or they lost their Google Authenticator or whatever? I think that question is somewhat up to the individual, but it is kind of hard to know whether you're more vulnerable to theft or you're more vulnerable to forgetting your password and things like that.
Well, that's a difficult question to answer, primarily because we don't know what the customer service capabilities of these online wallets are. Or rather, when we do have need for customer service, in general, most of them have been found wanting and are not able to deliver the kind of customer service that's required. So it's not uncommon to have a problem with a withdrawal or a transaction and wait 4 or 5 weeks to get a resolution from one of these online wallets. Part of the issue for them is if they increase security, they're also going to increase the number of support requests for getting around that security or dealing with problems, as you said, Stephanie. So it's definitely not easy. The bottom line is that online wallets can be made secure, and that's the main feature and capability they have to offer, because offering as their only feature the ability to do cheap transactions online is something that you can already do with other types of wallets and isn't really a big differentiator. So I think we're going to start seeing security and customer service take a lead in being differentiators for these companies, and that's how it should be.
So let's take this a different way for a second. Is there a niche for a web wallet that actually guarantees your balance in the event of whatever? I mean, like it could be a wallet that provides it as a service, or it could be like a third-party insurance broker that essentially looks and says, okay, well, you're on blockchain.info with two-factor authentication, so we're willing to take the risk on you. Here's the payment, and essentially guarantee you.
Good luck finding someone who will guarantee that.
Well, but I mean, it sets standards. This is how insurance actually comes into existence. It's the setting of standards and the enforcement by the people who actually have it to risk. The risk goes off of the person who's buying the insurance and onto the insurer, who then becomes the full-time job of.
Lloyd's of London is usually the first for obscure and strange new insurance schemes, but very, very quickly thereafter, there are dozens of reinsurance companies that will act as underwriters on different types of policies. The question is not whether you can get such insurance, but what it will cost and how much documentation you need to provide in order to actually get it to work. And we have seen this in the information security space. So getting insurance against hacking and to cover the cost of breach notification and restoration and restitution of users. That has existed now for almost a decade, and it's become a rather sophisticated, well-defined, and easily available type of insurance policy here in the US. So I don't think it's outlandish to assume that you can have essentially private depositors insurance that's underwritten by an insurance company. I think that is possible, and I think it's a very interesting differentiator product.
This is to both of you. Would you pay for that service? If it cost 0.05%, or, you know, there was a, I mean, so what's a nominal fee for that?
I don't think it would cost 0.05% of your balance annually or whatever. I think it would be a lot more than that. But we're seeing that thefts are actually pretty common. I mean, for me, it would depend on the cost, and I would have to answer it based on that. But then again, you know, insurance companies also have an incentive to prevent crime before it happens and to solve crimes after they happen. And so and also to prevent insurance fraud, right? So they're going to be looking into this stuff carefully. And even if not everybody buys insurance, insurance companies for Bitcoin wallets could potentially have a safety promoting or a beneficial effect on the whole community, kind of as a net.
That's the sort of thing that would actually make it so that I would use a web wallet, because I've used web wallets for incredibly small amounts when I had absolutely no other option. But other than that, I really avoid, and, you know, when I'm using, you know, like Android wallets or things like that, then again, that's just keep a little bit on there until you don't need it anymore, and then move it off. But if there was like, if I could know that this is not going to be a problem I'm going to have, then it's more convenient. But lacking that, I don't trust it.
Well, the burden of an insurance scheme like this, like a depositor insurance on a broad wallet service, would not fall on the customers. It wouldn't. It would fall on the provider of that service, and they would pay for it in order to get the differentiator and competitive advantage that such a guarantee would offer. And the thing is that it wouldn't be a matter of, look, here's our security, now tell us how much we need to pay in order to ensure this. It would be more of a back and forth that would probably take months, which would involve, here's our security, well, we can't ensure that, here's where you need to improve, and if you pass these, and these standards and submit to these, and these audits, then we can offer you a plan for X. And essentially, the companies will have to up-secure themselves to a level that meets the scrutiny of the insurer before they'll issue such an insurance scheme. It's totally doable. And it would be a good competitive differentiator. And as far as I'm concerned, I don't think the customer should ever pay for that. That would be the cost of doing business and a great competitive differentiator.
But they may pass that cost on to the consumer and say, well, there's a fee to use our wallet, right?
They may, although over time I can't see that lasting very long because someone else is going to offer it for free. And keep in mind that many of the same things the insurance companies will ask for will eventually become regulated constraints and requirements in most countries. So I wouldn't be surprised if you start seeing this. The companies that are interested in regulation will pursue this.
I was wondering about that before. Like, why doesn't something like this exist yet? But perhaps it's coming.
Well, even if it did exist and they're currently in conversations with, say, Lloyd's of London, it's a multi-month or perhaps even multi-year process. To reach a level of clarity, as long as Lloyd's understands the risk and can put it in a bracket and say it's going to be no less risk than this, no more risk than that, then they can stick a premium on it, no matter how weird the product is. It will take a time for them to become, or any reinsurer to become comfortable about the range of risk they're taking on in Bitcoin and to understand it.
Just imagine the day when Lloyd's of London is insuring Bitcoin stuff.
It will come soon. They have insured everything that can be insured ever in the history of insurance. So why not Bitcoin?
One of the things to keep in mind, Stephanie, is that, a year ago, we were in single digits for the prices, right? I mean, like, it's November now. So a year ago, I think we were at like $9 or $8 or something like that. A year ago. So we've come really, really, really far. And a year ago, it just didn't matter at all because the price was so small that the amounts you were talking about weren't worth the attention of anyone. But now, now a year later, this is the sort of pricing that actually makes something like this exist. And these are the sort of events, the high profile events that make something like this come into existence because clearly it's needed and suddenly the market is there and willing to pay for it.
Exactly. Just as those Bitcoin are sitting in your account, the risk of holding them increases with the increase in price. Price is almost irrelevant in the long-term survival success and technology value of Bitcoin, because Bitcoin is so much more to humanity than simply a currency exchange rate. But in the tactical short term, the exchange rate defines our purchasing power, it defines the risk level we're facing, and also the risk premium we're willing to pay to ensure our losses. So essentially, the increase in price has created new markets now, as you said, Adam.
And it keeps doing it too. I mean, that of course is the other thing, is that like we see this like every month, something different is happening and you can trace it back and say, okay, that, that's the spike where that person got in.
That's the aspect of Bitcoin that makes it look like an IPO. The exchange rate price increases is creating funds among many of the people invested in Bitcoin who are going to turn around and reinvest those funds in making Bitcoin better. So we are living the IPO of Bitcoin, and we are making internal gains in the currency that allow people to reinvest.
Hi, listener. Here at Let's Talk Bitcoin, we're building a global network of correspondents able to contribute on-the-ground perspective when cryptocurrency-related information comes across their filters. If you'd like to join our global conversation, send an email with your name and geographic or cultural niche to apply@letstalkbitcoin.com. Just like Bitcoin, the only barrier to entry is your time and good work. Thanks for listening.
EasyDNS is the Swiss Army knife for your domain names, helping meet their customers' individual needs since 1998. EasyDNS has been an outspoken critic of SOPA and CISPA. EasyDNS was an early supporter of Bitcoin, and now they are proud to sponsor this show. Do business with a company that shares your values. Get a 13% discount when you pay with Bitcoin. Go to bitcoin.easydns.com and be sure to use discount code LTB.
The Island of Stone Bitcoins by George Ettinger. So, you've decided to tell somebody about Bitcoin. I, for one, am glad to hear it. You have my congratulations and respect. Explaining Bitcoin is a noble endeavor. Other noble endeavors include bathing a leper, manually clearing blockage from a constipated mule, and applying for anything involving the words Phase 1 human clinical trials. My point is you're doing something that's highly necessary and will ideally make the world a better place in the grand scheme. In the immediate future, however, you will be miserable. You'll be miserable, tired, and really wonder how anything good could come of this. Bitcoin does not lend itself to casual explanation or to convenient metaphor. In fact, very few comparisons even suit it. It's a currency, but it works like a commodity. It's mined at limited quantities, so it's almost like gold, except it's created at an exact fixed rate and will end at an exact fixed point, so it's not like gold. The work of mining doesn't really accomplish anything either. Bitcoin is a train wreck of anachronisms to have to dump on any unsuspecting novice, and horrible pseudo-words like blockchain and hashcash just make it sound like more of a scam. Take all this insufferable jargon and add the fact that any given person you're explaining it to has used fiat currency notes their whole life, and you have a recipe for nothing. Probably nothing. There's the slightest sliver of possibility they'll understand and take interest, and the much greater likelihood they'll become exasperated and simply hate the stuff out of frustration. I'm getting angry just thinking about it, actually. You're more likely to create a frothing madman who calls Bitcoin a pyramid scheme, showing equally poor understanding of Bitcoin and of pyramid schemes, than an excited new adopter. What we need is a story. A story with a point, with a message, with an illustration of what we're trying to get across. In ancient times, before the centuries-old culmination of written human language was abandoned in favor of blogging, this was known as an allegory. In my last article, I made mention of a story that helped finally introduce me to the world of Bitcoin, and the more I've learned, the more apt the story has become. There's a strong allegory for Bitcoin in a currency that's already been used before. That currency is hundreds of years old, and there isn't anything else quite like it.
The primordial Bitcoin.
Off in the Pacific Ocean, among the Caroline Islands, is a particular trio of small islands known together as the island of Yap. Its native residents form several communities among the islands and number in the thousands. From its discovery by Spain in the 16th century until the turn of the 20th, it was a largely ignored Spanish property. Once the island fell under German ownership in 1899, more details of their peculiar culture were finally exposed to the Western world. More specifically, their peculiar economy. Yap was lush in vegetation and fairly sustainable, but had no precious metals or minerals to be found. So, for function of currency, they made stone coins. The people of Yap, keen on not half-assing the whole coin thing, decided to go big and to go home. They sailed up to 400 miles to other islands with vast limestone quarries so they could carve out enormous stone discs 3 to 12 feet in diameter, wheel them over to rafts, and sail them back to Yap. The men who carved the stone rolled it into a convenient place, even if it took a dozen extra hands to do so, and it was ready for trade. After they mined and moved the coin, its journey really was done. When the time came for a large trade, something on par with livestock or a dowry, the coin changed hands. By changed hands, I mean the two involved parties loudly and publicly declared that this particular coin here was now property of so-and-so, and proceeded to leave it right where it was. Nobody could be arsed to move the bloody things. They were massive, and the community was tight-knit, so why bother? Generations passed, and the stones never moved. Tallies were never marked or recorded on the stones. It wasn't necessary. Business was conducted and announced publicly, and the rightful owner of any given stone was common knowledge to anyone living near it. So, these stone coins weren't traditional coins. You could not fit them in the pockets of anything but the most clownly of pants. You couldn't even put them in a vault for safekeeping. They simply existed, and the community kept the knowledge of who owned which at any given time. Anyone who's arrived at letstalkbitcoin.com through conscious effort and not via any elaborate cat-on-keyboard incident should be able to see some of the parallels at work here. To those of you who see it, I say, shut up, it gets even better.
The stone blockchain.
For at least 3 generations, there was a particular family in a particular home whose wealth was well known across the islands. The family had long been owners of what might have been one of the biggest coins in circulation, and not one of those people on the islands had seen it. Those aforementioned generations earlier, this enormous coin was carved out and loaded up for transport by an expedition of incredibly ambitious Yap residents. Their prodigious haul slipped from import manifests and into mytho history when a harsh storm battered their rafts just a little ways from home shores. The raft carrying King Coin, or Coin Kong? I didn't really think this one through, sorry. Was cut loose, and their newfound wealth plummeted to the seafloor. Now, in a boring, physicality-obsessed fiat economy, this would be the tragic end of an otherwise uplifting tale of heroic and Homeric avarice. The story would be embellished, talk of sirens and wizards would be peppered throughout the narrative, and at the end of the day, these men would still be broke. The people of Yap, however, did not see what the fuss was about. The men of the expedition all vouched for the proportions of the coin and its general location. Adding to this the fact that it was lost only in the tangible sense and not in the fiscal one, there was no reason to go on using it. After all, they lost their millions to a storm, not to the craps table. Just like that coin between those two trees, or that coin next to Jim's house, or that coin of Bob's that looks conspicuously like a phallus but it gets angry when you point it out. This coin entered circulation based on reputation. It was that coin at the bottom of the ocean, and this family clutched it for years before spending it on God knows what. The stone coins already existed in a decentralized, community-enforced ledger. By this precedent, they no longer needed to even be tactile objects. Stone coins were simply a unit on a stone coin blockchain, tracked by group-verified transactions, and with only so many coins in circulation, the community kept fairly consistent tabs on who owned what. Whether or not Yap investors lived in fear of a 51% attack is beyond the scope of this allegory, but the point itself should be abundantly clear by now.
So the stone coins are an allegory for Bitcoin.
The point is that the stone coins are an allegory for Bitcoin. I hope I didn't make that too subtle. In this interpretation of the stone money of Yap as an allegory for Bitcoins, see previous sentences, the story becomes a functional teaching tool. The story of Yap and its coins is a place to start when introducing newcomers to the blockchain, and I cannot emphasize teaching the blockchain nearly enough. You don't teach a person what a Bitcoin is as much as you don't explain the texture, shape, and flavor of Yap's limestone coins. You tell them how they're recorded and how they're used. Just as each of us keeps a record of the blockchain, the people of Yap had to keep aware of who owned what. Ownership was a matter of public declaration. By spreading word to others, it became verification. You didn't own currency unless you got the majority of the community to agree you did. You did this by conducting your business transparently and announcing transactions to the world at large. A deal made in secret or made dishonestly was impossible. Transparency was part of their protocol. Bitcoin and Stonecoin changed hands almost identically. Whether limestone or crypto, these aren't the typical coins one rustles from sofa cushions in the pockets of playground extortion victims. We don't lay eyes on these coins. We just all agree on where they are and who they belong to. All our Bitcoins are on the metaphorical ocean floor, safely away from prying eyes and sticky fingers, and every member of the community is sitting on a hard copy of the ledger. We don't simply trust, however. Our ledger is produced, updated, and thoroughly encrypted by the same software protocol that made it possible. Prying eyes aren't left totally in the dark either. The same blockchain that tracks the ledger is protected from being altered, but is visible to anyone who wants to see what coins have moved where. What Yap enforced by culture, we enforce by encryption. What they cut from stone, we carve from graphics cards. It's these traits that made their stones and our Bitcoins commodities instead of reserve notes. False value could not simply be printed off a press. Bitcoins and Stonecoins weren't empty promises generated on a whim. They are the product of an investment, whether it's time spent sailing or time spent mining a processor. The story of Yap, the Stonecoins, and the system they used is a great teaching tool, certainly. But it's not just for the outsiders. See, the story of stone money doesn't simply end there. All of us within the community can learn from what happened to Yap's Stonecoins when the taxman came calling.
Stonecoin goes to Washington.
After Germany got over the novelty of having their own tiny pre-industrial island, it decided to move in and get unpacking. They mercifully weren't too insistent on displacing or bothering the native culture too much, but they wanted room for military stations around the islands, and they wanted the infrastructure to connect them. The simple gravel walking trails connecting all of Yap's villages were awesome for bare feet and Batcave-sized novelty coins, but less than ideal for German road vehicles. The German government sent out word to all the village leaders that wider, modern stone roads needed to be implemented across the islands. It isn't in doubt whether or not the elders got the message, it just seems unlikely that any of them gave a damn what their absentee foreign overlords wanted. There was very little incentive to appease these strangers, and months upon months went by without any sign of the tropical expressway the military was looking for. The German officials, recognizing that no progress was being made, resorted to other means of motivating the locals. The callous Germans slaughtered the island inhabitants swiftly and brutally, is what you expected me to say, because you, sir, are a racist, and shame on you. These were turn-of-the-century bureaucrats, not Nazis, first off. Second, social disagreements didn't actually escalate into graphic violence at the rate that modern flame wars would have you believe. The German solution was so simple and non-violent it made Gandhi look like Manson. A few officials went around the island, spray-painting sizable black X's on the biggest stone coins they could find. They then proclaimed for all to hear that these stones were confiscated funds of the German government. The people of Yap had been fined. Durable, modern-sized roads appeared in very short order. Upon completion, friendly German officials were dispatched once again, this time with solvents to clean the marks off the stones. Their levied fines had been refunded. The people of Yap were manipulated, of course. But was their money manipulated, or was their belief? The Germans never took a thing away from the residents of the island. They simply preyed on their willingness to play by their rules. In their graciousness to be part of a larger world their European masters presented, the people of Yap mistakenly believed those paint-wielding officials' rules held real power over them. Forgetting that they themselves, the community, held power over their own money, they let the illusion of authority give a few bureaucrats real authority. There's an altogether different and much less funny allegory at work there. In the world of Bitcoin, we're beset on seemingly all sides by the specter of government intervention. We have men and women of our own community crying out for recognition, permission, and regulation from various political masters, all out of fear. Bitcoin isn't being threatened by the government, but we are. Bitcoin is a protocol, it's not a place or a thing, and to call it international is understating its virility. Bitcoin is apolitical. It transcends boundaries as if no boundaries existed. Law can claim about as much jurisdiction over Bitcoin as it can over wind and rain. It simply isn't all that vulnerable to governance. But we are, and we're projecting our weakness onto Bitcoin by begging for political legitimacy. In threatening businesses and individuals over Bitcoin, bureaucrats are again painting marks on values they don't respect. They can harm us as individuals, it's true, but we can't give them more power than they are due. So long as we go back and forth between cryptocurrency and fiat currency, we're pinned under their thumbs. The more we trade in Bitcoin as a currency, and not as a speculative medium for dollar gains, the more freedom we secure. Business and value are human creations, not political entities, and by seeking their approval and placating their whims, we give them political authority over us. If we keep volunteering to play the Bitcoin game by their rules, we may eventually start to believe them. And then Bitcoin won't be Bitcoin anymore. It'll be theirs. Thank you for listening. The story of Yap and the eponymous Island of Stone Money was originally told in 1910 by anthropologist William Henry Furness III. The subsequent 1991 revisiting of the subject by the Hoover Institution was researched and written by Milton Friedman. This interpretation and commentary of their works is entirely the product of this author.
Is the Bitcoin price in a bubble? Only time will tell, but one thing's for sure. Bitcoin video passes are on sale. Normally $75 for those paying in US funds. Visit bitcoinvideopass.com and spend only 0.1 to 0.2 Bitcoins, 0.12 Bitcoins at the time this was recorded, to access all the talks and panels from the October Cryptocurrency Conference. See how easy buying with Bitcoin can be and experience instant access as soon as you've paid without even reloading the page. Check it out at bitcoinvideopass.com.
Hi, this is Jason King, founder at Sean's Outpost, and you are listening to Let's Talk Bitcoin. Sean's Outpost is a homeless outreach in Pensacola, Florida, and we are proudly powered by Bitcoin. To date, over 13,000 meals have been fed to the homeless in our area, all purchased with Bitcoin and through the generosity of the cryptocurrency community. Read more about us at seansoutpost.com. Food, shelter, Bitcoin, everybody. Sean'sOutpost.com.
I think we have to talk about the thing that's on everyone's minds and the elephant in the room, even though personally I think the three of us maybe don't put as much weight on this particular thing as maybe people in the mainstream do. And of course, I'm talking about the exchange rate of Bitcoin or the price of Bitcoin. And it's up quite a bit. My Bitcoin Paranoid app on my phone has been buzzing nonstop every 15 seconds with a new all-time highs. Bitcoin surpassed its previous all-time high of 266. That's the Mt. Gox price, of course, on November 5th. And not only did Mt. Gox price, which is the highest exchange rate, pass the previous high, but also the other exchanges too are well over 266 currently as we're recording this. I think this is important for at least a few reasons. I mean, price at least has some relation to who's taking an interest in Bitcoin, who's taking a position in Bitcoin. And there's been a lot of talk about interest in China recently. There was a Canadian Bitcoin ATM or Bitcoin vending machine that came out that did $100,000 worth of transactions in its first couple days, or over $100,000 worth of transactions in its first couple days. people are really starting to notice Bitcoin, and the trading volume is high too. So it doesn't appear to be that the price is going up, but there's really not the volume to support it. It seems like a lot of people are trading Bitcoin. Another thing I forgot to add too is when Bitcoin goes nuts, altcoins also go nuts, and so altcoins are also on the move upwards as we are recording this show right now. Do you guys think this can last? I mean, it seems like a fast increase. You think it's going to crash? Do you think this price is maybe biased? Do you think it's inflated? I hesitate to even say those terms because, as we've said before, every price is a real price. But what do you think about the Bitcoin exchange rate right now?
Stephanie, I just wanted to say that actually I do care about the price. I didn't think I cared about the price, but now I do care about the price because turns out, since I denominate a lot of the rates that we pay contractors in Bitcoin, it means that my prices have gone down. We're kind of watching a deflationary currency in action. But literally this morning, I had one of the contractors I reach out to offer to cut his price in half because of the increase in Bitcoin's value over time. So from my perspective, it's nothing but a win. Whether it's sustainable or not, I don't know. I have become of the Seinfeld school of thought about the Bitcoin price recently, which is that whatever I think about it, probably I represent the fringiest of the fringe on the believer side, and I'm able to step back, I like to think, and try to make rational decisions. But it's that making of rational decisions that is the fundamental problem. So now I've gone with whatever I believe. I just assume the complete opposite at this point. So no, I think this is not sustainable.
So you want to believe that it is sustainable, but you're assuming the opposite and taking a skeptical position?
Yeah, we can go with that. Really, I just don't know what to think. And every time I try to make any sort of decisions based on what I think, based on, as far as what the market is going to do, I'm just wrong. And even when I'm wrong and I try to counter and get ahead of that and be like, okay, well, that's what I think, so that's going to be wrong, then I'm still wrong. So I've just completely stopped playing. I just do stuff now.
Listen, in order to find the definitive answer to what exactly is happening, all we need to do is use the analytic tools we have for characterizing a asset class that is a cryptocurrency, a bond, a stock, an IPO, a commodity, operates on a global network, and is traded 24/7 in a distributed exchange that spans the globe. Now, I don't actually have any analytical tools that speak to that because we've never seen an asset class like this before. We can't say it's a bubble because bubbles have only ever applied previously to stocks and commodities. This isn't a stock or commodity. It's a bit of both and a currency as well, so we don't know about that. It kind of behaves like a bond. There might be a bubble there, but we don't know about that either. So analytically, we don't have the tools. I think we should develop the tools to start talking about these cryptocurrency asset classes more intelligently, to understand things like not just exchange liquidity, which is the front end, the on-ramp, if you like, into this economy, but the depth of the actual economy, both in terms of users, in terms of nodes that are mining, as well as the monetary supply, M0 measure, M1 measure, and M2 measure now. Here's the thing. We don't have the tools to do this analysis, but I'm focusing on a couple of the underlying drivers. First of all, the run-up from 100 to 200 was very slow by Bitcoin standards and steady. It wasn't one of those, in 24 hours, huge spike and then dumped. It was just kind of an uphill climb over a couple of weeks. This latest spike has surprised me. I go to bed, I wake up in the morning, I'm richer. Every day I wake up, I'm expecting to see Bitcoin at 20. And I am ready to buy because I don't look at this price as a short-term thing. I'm really interested in only the long-term of Bitcoin. But here's what keeps me hopeful. This is the most important thing that happened in Bitcoin over the last year. As of this week, BTC China represents almost half the volume in Bitcoin sales. That has never happened before. As of this week, the three other exchanges that weren't Mt. Gox actually erased the price difference, the bid-ask spread, and the spread between exchanges that was immune to arbitrage before. And some point yesterday, for the first time ever, Bitstamp price overtook Mt. Gox, and then Coinbase price overtook Mt. Gox. That has some very serious implications because it means you can now transfer Bitcoin to those services and take it out without making a loss. So it opens some of the barriers to Bitcoin with US dollar withdrawals from Mt. Gox. The geography has shifted. Right now, the center of gravity of Bitcoin is in Southeast Asia, somewhere between China and India. That is the important news, because that wave is deep, it's big, and it happened.
So that, I think, is a really important point. We've actually been meaning to get to this China topic for a while, and I've been talking to some people who are active in the space, and I actually have some thoughts that I want to get your opinion on. So one thing, BTC China. Okay, so China is not your average country when it comes to how you can use and acquire and their currency, right? The yuan is very tightly controlled outside of mainland China, and so what BTC China is doing actually is letting people buy Bitcoin with yuan. In the US, we have this same sort of thing. You buy Bitcoin with dollars, but the other side of it is that the US dollar is an internationally traded forex currency, whereas the Chinese yuan is not. The Chinese yuan is very tightly controlled, and if you need to buy, like if you have a business and need to buy supplies or something like that from another country, then you can get US dollars from the government or from a licensed exchange, but ultimately it's very tightly controlled for those reasons. So BTC China is essentially allowing people to take yuan that should only be able to be yuan and turn them into Bitcoin. And once they're Bitcoin, then they can go anywhere in the world and do anything they want, and it's completely outside of the Chinese government's control, which seems to be important to them. So, I mean, is that sustainable?
That's enormously sustainable. The emerging middle class and the urban middle class in China is both very large and extremely deep in funds, and they have a savings rate that exceeds 50%, so they have a lot of spare cash around, and they have currency controls that are restricting them from using that cash, and they have fear of government control. If you add all of that, the incentives are there for a very deep, very long wave of Chinese adoption. The only question is, can they do it without the government cracking down? And we've had the answer to that. For the last several months, there have been a number of documentaries on Chinese TV essentially explaining and promoting Bitcoin. Those documentaries did not get on Chinese TV by accident. They did not get on Chinese TV despite the censors. They got there with endorsement and approval from the highest levels of the Chinese Communist Party government.
So is this a poke in the eye then to the US? I mean, like...
Absolutely. Absolutely. The Chinese get this. They understand the basic equation, which is we would rather have a world reserve currency that no one controls than one that our biggest trading competitor and enemy potentially controls. So for China, this is a very, very straightforward strategic move. The world reserve currency and petrodollar is a strategic disadvantage for them. They'd rather have a neutral player. And what they see is that they still have control over their population more so than the US has control over its population. So they see that any downside that Bitcoin might create through lack of control will be felt more in the US than it does in China. At least that's their calculation. And I think this wave is extremely significant because it is fully endorsed by the government, it is promoted by the government, and it has a humongous emerging middle class behind it. So if you look at it from that perspective, $300 Bitcoin actually has a pretty solid base from the perspective that this is not caused by sentiment. This is caused by expansion of 50% of the market of Bitcoin into a completely new and untapped market, which is China. And of course, we've got 180 countries to follow. And, you know, the one to watch next is India, or possibly one of the Latin American countries. But this is the first non-Western adoption, and what it's done is it's shifted the center of gravity of the Bitcoin universe firmly into the middle of Asia, which is where the center of gravity of humanity is. If you want to see the future of Bitcoin, the future of Bitcoin is a 20-year-old, 28-year-old male Han Chinese person, just like the average human face. And so Bitcoin is firmly out of the hands of the Western geeky fad chasers like us, and it is now firmly in the hands of the emerging economies of the other 6.5 billion. And that's the best news we've had so far.
So ultimately, I mean, whether or not the price is sustainable, I don't necessarily know that it matters, but, you know, do we want to make end of the year predictions or anything like that at this point just for the fun of it?
Oh gosh, predictions. People are going to hold us to them. I have a prediction. In the long run, in the next 5 years, Bitcoins are going to go up. How
Very
about
good.
that?
Excellent.
Very vague.
I have a prediction. 99.8% of all financial analyst predictions expressed on Bitcoin will be wrong within 3 months. And that prediction is recursive.
That's why you got to go really vague, like I did, Andreas. Very just Nostradamus. Think
Well,
Nostradamus.
I did allow for 2%, right?
Right.
To be
Some
correct.
wiggle room in there.
Excellent job, yeah.
I don't know. I don't know if I think it's going to hold. I really just don't know. I'm going to go with that. My prediction is I still, in 3 months, will not know what the price is going to do.
Yeah, listen, I would not be surprised if tomorrow morning I wake up and Bitcoin is at 20. I would not be surprised in the slightest. It would not upset me. I would see that as a natural part of our seesaw boom-bust cycle that we've been going through. What I do know is that the new consensus price is much higher, and what I do know is that people are now comfortable with 3-digit price Bitcoin in US dollars. And that changes the game, because in a logarithmic currency, the next step is 4 digits.
I guess kind of to bring this discussion full circle, we started out by mentioning the Bitcoin machine in Canada that did a huge volume of sales just in the first week that it was in operation. And, you know, we're talking about Bitcoin adoption in China and all around the rest of the world. It's really a great excuse to get out of this. For those of us who are in the US, it's a great excuse to get out of this US-centric frame of mind and realize that the world does not revolve around us. You know, there's a whole planet out there, and there's 7 billion people, and a lot of them are going to be finding out about Bitcoin very soon.
Yes, we are now very much and truly a world currency. And I think that was a very important milestone. I'm beginning to see all of the facts on the ground supporting the fact that we are well and truly a world currency. We've got new ATMs in Canada, We've got new buyers in China. We've got conferences all around the world happening with great interest, especially in countries that are currently facing currency crises. Over the next month or so, I'm going to be traveling almost continuously internationally. First going to Athens, Greece, in order to speak at a conference there on disruptive technologies and economics. As far as I can tell, it's going to be attended by members of the government of Greece. Following that, Milan, where we've got the hackathon launch of Dark Wallet. After that, Buenos Aires, and then finally Las Vegas back here in the US. The international scene is heating up, and I very much hope to spend most of next year with my butt on a plane seat and flying around visiting Bitcoin communities around the world, because it's absolutely not about us. It's about the other 6.5 billion, including our new friends from Canada.
Yeah, speaking of Canada, there's also a new service launching in Canada where they've got a Bitcoin debit credit card, something like that. It's some kind of card that you can load Bitcoins onto and pay for stuff, which, wow. The U.S. is really going to be left behind, especially with all this regulatory fervor, shall we say, and uncertainty. And I think that's unfortunate. But hey, we can always move our feet, right? We can always leave if we really don't like it that much.
Hey, we don't want no stinking innovation in this country. We like collecting fees for doing nothing.
You know, I was talking with somebody about debit cards to do Bitcoin recently, and actually they're much easier to actually manufacture and have made than I thought. So I anticipate us seeing a lot of these over the next couple of years, because really the barrier to entry is very low. It's just the regulatory,
Yeah, exactly.
The regulatory.
the problem is all in the regulatory. I mean,
Yes.
People were talking, I remember BitInstant was talking about having a Bitcoin debit card 2 years ago. And they just got held up by the regulatory stuff. There was no problem with the technology.
Even in the prepaid market here in the US, the requirements for doing KYC, know your customer, and collecting identification are so onerous. And you can see the difference in regulation. Stephanie, you mentioned that one of the Canadian ATM has 3 identity features, but 2 of those are turned off.
I did.
Okay, sorry. Two out of the 3 identity mechanisms are turned off, and that's not technology. That's all regulation. So already we're seeing this competitive arms race playing out not in the technology field, but in who can stomach the risk of a new currency without trying to regulate it out of existence? And the answer so far seems to be the US cannot.
Yeah, so actually, I have a perspective on that because we're actually trying to figure out how onerous it is to actually get some of these in. I'd like to put some of the RoboCoin ATMs into a couple locations in California where we are, albeit that's this is of course an impossible task. Another one I've decided to try and take on for myself. But I've been looking into these machines, and yeah, they have a number of security features. But the one in Canada, because of the compliance situation, only uses the palm scanner, right? So it scans the vein in your palm to make sure that you're the same person. And that again is so that they don't have limits, right? Because you're only allowed to sell a certain number in a day. So they don't have to...
They can put limits per person instead of limits overall for the purchases, right?
Yeah, so they can put per person limits just by using the palm vein scanner. But in the US, what we'll have to do is also have a separate government ID that'll be held up to essentially a camera where the picture will be taken, and then your picture as the person using it will also be taken and compared to the picture on your ID. So those are the other two steps that they haven't had to turn on in the Canadian situation. One of the interesting questions that I have is how long is it going to take for these machines to pay for themselves? Because as ATMs go, the RoboCoin kiosks are quite expensive. ATMs range anywhere from $2,500 to $15,000 for really advanced ones, and the RoboCoins are $20,000.
If they did 100,000 in just a few days, yeah, that's quite impressive, though.
Can you set your own fee on a RoboCoin?
You can, but they have standards. The standard fees are 2% for buying and 5% for selling.
Okay, so they've already made 5K.
Yeah, no, I mean,
100K.
This is I just did the math, and it literally is a 90-day turnaround based on these initial numbers, which I have to imagine will get more, not less, right? I mean, if Bitcoin stops being popular, then they'll have to, then they're tying their fate to that. But ultimately, as a new thing, I guess it got media attention. I don't know. We'll just have to wait and see how this shakes out. But I'm super curious to see how long it takes to pay it back, because you literally have to have $1 million go through one of these machines at the default prices before you're seeing any sort of profit.
The hardest thing will be keeping it stocked and complying with all the regulatory stuff.
Yeah, there's no stalking. I mean, these machines, again, that's another interesting part, is they essentially connect directly in. They're not like the Lamassu. The Lamassu machines, you load them up with Bitcoin, and then they can dispense whatever Bitcoins they have. But ultimately, once you run out of Bitcoins, you got to put more in. Now, although I guess you could do that remotely. But with the RoboCoin, it's literally making market transactions on Bitstamp for you.
But what if Bitstamp goes down?
They have alternatives. I mean, they have a couple others that are available. That was the one that, again, it's shipping preloaded with.
And so, in fact, then, the regulatory climate is probably the predominant factor in whether you break even, whether you get a return on investment on these devices, which is why such a thing will be extremely successful in Canada and will be extremely successful in other countries that are not taking an approach to Bitcoin that is similar to that they take to syphilis. We're going to see it in emerging economies much more successful than in the US, because right now, just the other day, the Senate decided to call for hearings on Bitcoin to examine the risk that it poses to the economy. They're already framing it as a risk before they even had the hearings.
It's the only part of the economy that's actually doing good.
Right, and it is the greatest invention of the 21st century in computer science, probably the most important economic advancement in the last 50 years in terms of digital money, but let's talk about it purely in terms of risk. That's so short-sighted. It's like talking about the internet in 1994 and worrying that it's going to allow people to see R-rated movies that aren't supposed to see R-rated movies.
Satoshi Nakamoto for Nobel Prize in Economics.
But I would say first, the MacArthur Genius Award for mathematics, computer science.
Yes.
Because in terms of computer science, distributed time-stamped consensus through proof of work is the invention of the 21st century, without a doubt.
And we all know the Peace Prize doesn't mean anything anymore anyway.
This reaction from the Senate actually looks a whole lot like the reaction from PayPal to me, right? Like they're interested in it. They need to check it out, and maybe they'll have a positive thing to say about it. But I think that if we look at their motivations behind it and what they stand to lose, chances are pretty good we're not.
They're just going to faff about and make up some more reasons to protect the banks from any type of innovation. I have very little hope or faith that this will produce anything meaningful other than more knee-jerk regulation. And quite honestly, it's entirely irrelevant. It's entirely irrelevant because this is not about payment networks and this is not about moving currency around. This is about reinventing money. And so far, they're not seeing that.
You know, the other thing else that they're not seeing? They're not seeing that they're proving the point for why Satoshi left and why Satoshi is someone who can never come back and someone who can never make his identity known whatsoever, because it's just inviting this.
It's inviting ad hominem right away. Yes, absolutely. If you can't attack the idea, you attack the person who created the idea. And right now they're having trouble attacking either. So yeah, it's Satoshi disappearing was probably the best thing that ever happened to Bitcoin. There was another very interesting parallel, which was a presentation from Western Union where they said that Bitcoin is not ready for mainstream. And I think that was a very astute and correct analysis, because when Bitcoin is ready for mainstream, it will be very obvious, because then the question will be, Western who? Western Union is going to be the blockbuster of this generation of disruption. They will be disrupted out of business simply because unless they co-opt and use Bitcoin, their very reason of existence, which is the transfer of sums of money internationally, is completely solved by an algorithm. They've been replaced by a script, and that script costs a lot less to operate than Western Union.
So, I mean, just like Blockbuster, you know, I went someplace recently and I actually saw a Blockbuster because they sold off all the stores at a fraction of the, you know, the asset value. And in some niches, actually, they have survived. So maybe that's the future for Western Union and these other types of money transfer things. It's just areas where, for whatever reason, Bitcoin simply cannot reach. You know, I mean, maybe like Western Union literally goes back to, you know, horses in places where there simply are no roads and are no phone lines.
Quite honestly, I'd like to see Western Union as the place where you find the RoboCoin ATMs.
Thanks for listening to episode 58 of Let's Talk Bitcoin. The segments Two-Factor Security and Bitcoin Price were produced by Adam B. Levine, edited by Matthew Zipkin, and featured Andreas M. Antonopoulos, Stephanie Murphy, and Adam B. Levine. The Island of Stone Money was produced and edited by Adam B. Levine, written and read by George Ettinger, with additional voice work by Crystal Levine. Music was provided by Jared Rubens. Questions or comments? Email Adam at Let's Talk Bitcoin. Have a good one.